Hey, this is Josh. Today is Thursday, August 3rd. Today was it's looking like it's going to turn into a large trading range day. I'm doing this video a little early, try to get it out of the way. So I came in somewhere around, I think during this bar. I saw it as a weak high. I wanted it into a bull trend channel line, but I did not take the entry because I would have had to scale in. And there was this measuring gap, and the bulls were strong. The bears had struggled to reach a scalper's profit all morning, so I was not looking to sell. I prefer to trade with the always in direction. It wasn't necessarily an unreasonable trade if you're willing to scale in, but personally, I think it's better to wait until the market flips always in short before you start looking to sell. So the first decent swing trade was this 2-bar reversal. It was a small buy climax. We had a breakout gap, a measuring gap. The breakout gap's here, the measuring gap was here, and then a small exhaustion gap and bull trend channel overshoot, which was filled immediately on the next bar, making this a 2-bar reversal for a buy climax, likely to lead to 2 legs down. However, the risk was relatively large, and like I said, the bears have been relatively weak on the day. So questionable if it was going to turn into, it was also a bull trend from the open, so questionable if it was going to turn into a strong reversal or just lead to 2 legs down. Ultimately only led to 2 legs down, a wedge bull flag. There was a breakout pullback, second entry sell here, but at that point you're selling into the EMA in a relatively decent reversal up from the first entry, so prices could have this could have just formed a small second leg down and then rallied in a high 2 buy setup. But it turned into a stronger second bear leg. This I saw it as a weak low 1 at the bottom of a bull flag, so reasonable to buy below here. You are trading against the always in direction, so for that reason, I can't mark it as a best entry because best entries have to be, in my opinion, with the always in direction or a reversal that's likely to lead to an always in flip. So the market became always in short here for the second leg down. But so this was a weak low 1 buy setup, reasonable to buy below. And had you bought below, your stop, even a 10 pip stop would not have been reached. It went 7 pips before reversing up, but did not reach a 10 pip stop. However, you would have had to endure this small pullback. The bulls tried for a high 2 and an EMA gap bar here. Signal bar was not great, overlapped the prior bar, but it was a failed low 1. More likely buyers below this sell setup than sellers. It looks like we're getting a repeat pattern over here right now. But so the bears tried for a failed high 2 and reversal down. The bulls this signal bar here. Prices tick below, quickly reversed up into a wedge bull flag. This is mostly sideways at this point, but this was a reasonable swing buy for a wedge bull flag, second EMA gap bar. And instead, prices reversed in an outside bear bar, but the bears were unable to generate strong follow-through and sell the market off. Instead, we got this 2-bar reversal and larger wedge bull flag. So first push down, second push down, third push down. Sorry, slight interruption. So this was a reasonable swing buy for a wedge bull flag. It's also a higher low. The bulls had protected this breakout gap. It's a breakout pullback, test of this middle of the overnight trading range, test of the middle of the trading range. It's also a small sell climax. We had a measuring gap here and then small sell climax, likely to become an exhaustion gap. 2-bar reversal, strong buy setup. Bulls got good entry, bull follow through, became flip back to always in long here, making this a reasonable buy the close bar and reasonable to buy below for a weak low 1 after an always in flip. Prices quickly, after testing the entry price of this setup, prices rallied in an outside bull bar. I'm not positive, but I think this was a news announcement. I don't remember seeing any high volatility news announcements, but it's possible this was one. It was at 10 o'clock. So outside bull bar, bulls got follow through on the next bar. reasonable to buy the close, or below this weak sell setup. This inside bear doji was a weak short, so reasonable to buy below, acceptable scalp. Prices then drifted into this small bull channel and turned into a wedge stop and reversal down. Also a small buy climax here. But so this was a nested converging triangle. It's a swing buy because you're buying above a bull bar. A bear bar. It is a variant of a failed low too, but after the outside bull bar, I restart the count, so I consider it. You can still consider it a failed low too, as this entry failed and then this entry failed to trigger. So in that sense, you can consider it a variant of a failed low too. It's also the bears are trying to form a final flag reversal and are failing, and this sell setup could not trigger, and the bulls are buying bear closes and below bars, so likely to enter a channel. Quickly rallied up into a strong 2-bar breakout, signs of selling pressure, and small buy climax. We had this breakout gap was filled, but this breakout gap was left open, making this a measuring gap, and prices had reached near a measured move target. And this was an exhaustion gap likely to be filled and turn into another 2-bar reversal similar to here. However, the signal bar was weak as far as entering below this bull bar. Below the bear bar was okay, but it's still, you're selling into the bull trend line. So I think this is a reasonable buy setup below this bull bar because it was a weak sell setup, and it did end up reaching a scalper's profit. But this was a failed low too off of, if you're not that aggressive, you can wait for this, the stop entry here, which is at the same price level. But this was a failed low too, first entry, second entry off of the bull trend line, and failed bear reversal, and led to a test of this bull close in a tight bull micro channel. The other day I had question, and it's questionable if this trend line wasn't broken and it was actually steeper, maybe here, and it was broken on this trend line or this sell setup. And I forgot to mark this one, but this was another weak sell setup. So it's a low 2, but reasonable to buy below as a weak second entry into the bull trend line. So okay, limit order, acceptable scalp. And the other day I had a question about major trend reversals and identifying when one is likely. And this is a pretty good example of when a major trend reversal is more likely than a failed reversal. So prices had arguably broke the steep bull trend line, and then the rally to test the high contains many overlapping bars, and instead of strong consecutive bull bars, there are a lack of consecutive bull bars and tails above bars, and mostly sideways overlapping bars, making this a reasonable lower high swing short. It's a second entry, first entry, second entry. So not an unreasonable, and these bulls had exited after scaling in. Not an unreasonable swing short. There was the bulls got good entry, did not get good follow through. This was the first test of the EMA and many bars. However, the bulls tried for a failed reversal, and instead prices ticked above and quickly reversed down into a second entry for the major trend reversal. And but you're selling into the EMA at this point, so you need to take it for a swing short. And the bears did not quite flip the market to always in short until arguably here, or even here. It's questionable if we are not in a bull flag trading range now, I think the bears need a strong breakout below here before it's clearly always in short, but it was likely to lead to 2 legs down. Sorry, I got cut off. Not totally sure where it cut me off, but I think that prices are probably in a bull flag trading range now. I think that the bears need a strong breakout below here before it's clearly always in short, and a test down here is likely. There was a small sell climax here, and since the bulls are trying to rally the market. However, there has been very little buying pressure in this sell-off. This was a high to buy setup in an EMA gap bar, but the market's always in short at this point. Okay to take for a swing buy. And this was the second EMA gap bar. However, the second EMA gap bar failed, making this a failed high 2 and reasonable and acceptable scalp to sell below. Prices reached the scalper's profit on this sell off here, but since prices have failed to break out below this low, it looks like it's a trading range forming, but it's possible that this turns into a large trading range day and prices test back down to here or here. It started out as a bull trend from the open, but after 2 legs up and a buy climax and major trend reversal, prices have mainly gone sideways. Seemed like there was something else I was going to mention. I can't remember, but so today I've got questions, but I'm going to refrain from answering questions on price action analysis, and instead I'm going to focus on questions based around trading psychology, because I think that it's an equally important topic versus just understanding price action itself. And I got some interesting questions based around my personal journey. So I think with that, I will get to those questions. Okay, so the first question is, he says, it surprised me where you were working at before as a manager. Did this help you to become a better trader? And to be honest, I had never considered this question. I've been asked a similar question as far as whether my college degrees have helped me become a trader. And to that question, I said yes and no. Because I think that any higher level of education increases your critical thinking skills and makes you better at anything you try to apply yourself at. But at the same time, I don't necessarily think that a college degree is necessary to learn how to trade, especially since because markets are in a sense their own animal. I think that being smart is not necessarily a advantage at some points. There are a lot of very smart people that work on Wall Street, physicists, engineers, all kinds of different fields, but I know doctors who are specialized in their field and are very smart people and know all kinds of things even outside of their field, but they cannot trade successfully and they have not had luck at trading. So with that said, I don't necessarily think that being smart or a lack of being smart is a handicap. But as far as being a manager for corporate America, did that help me become a trader? Now that I've thought about the question, I would say it definitely helped me realize what I did not want to do. And this particular trader, I think he's from Spain, so he may not necessarily understand corporate America and what I mean whenever I talk about the culture of corporate America. But in that setting, your job as a manager is to either create and enforce rules that you push down onto your people, or enforce rules that were given to you by corporate. And these type of people everybody is a number in corporate America. Everybody is replaceable, and I personally did not like that. I did not like that environment, and I knew I was never happy. Sure, I made great money, and had good benefits or whatever, and a steady job, steady income, and a salary. I had plenty of vacation, but I wasn't happy. I didn't want to go to work every day. I whenever I was at work, I would often look out the front doors and think there's got to be something else to my life. Basically, I felt like I was holding myself back by staying there. And it's kind of funny because back then on Friday, I couldn't wait for Friday afternoon, and I couldn't, and then on Monday, I dreaded Mondays. I couldn't wait for the weekend, and then I hated Mondays. I hated having to go back to work. And now that I'm a trader, it's the opposite. Friday afternoons, I'm kind of like, disappointed. Now I got to wait until Monday before I can trade again. And then Sunday night and Monday rolls around, and I'm excited to get up. I'm excited to come in and trade. And I used to always think, man, if I could just sleep until 7 o'clock, I would be happy, right? And that was when I was back then. And now I wake up well before then. I wake up well before the sun comes up because I can't wait to get in and start trading. But so I think that it led me to know what it is that I wanted to do, which is trading, and it helped drive me more because I don't want to go back into corporate America, so in that sense I think that it's helped push me. But as far as what I learned as a manager, I don't know. I think that it probably did not help. It probably hurt me because, like I said, in that type of field, there are rules that you apply on a regular basis or to whatever it is you're managing or doing. And in trading, these rules, there are no rules. In trading, everything is subjective. And there's no set of rules that you can apply to markets and earn consistent money. So I found that an interesting question. He had a similar question or a second question. Let me see if I can find it. It was basically about okay. So when did you decide that scalping was better than swinging for your trading? Well, like I said yesterday or the other day, I started out scalping on tick and volume charts, and after that, I struggled to hold in the market in swing trade. So for that reason, I have just naturally been better at scalping, and because of that, because I started out doing that early on, I became accustomed to identifying high probability setups, and I don't care for taking low probability setups. And so up until this point, I'm good at identifying. Like I said recently, I've tried swing trading lately, and it doesn't work out as well for me. I'm a probability trader. I like to trade the always in direction. I like to scalp. My goal is to put on an always in position and then scalp while holding the always in position. Haven't quite got there yet, but it's something I'm working towards. But as far as when did I decide that, I never really decided it. It was kind of decided for me. Like I said, it's hard for me to. I don't know why it's hard for me to hold longer term in the market, and I think that's probably because I started out as a scalper. And so for that reason, I think that if you're a beginner, that it's definitely best to start swing trading for many reasons, not just that reason. But so it's not that I decided that I need to be a scalper. It's just that's where I have ended up, I guess you could say. He also has a similar question. Do you think that Brooks' course is to build your own strategy? He provides many tools to measure and analyze the market, but then you see that he has his own way of trading. And I would say, yeah, Al Brooks, the course teaches you, it teaches you the market cycle, price action, how to manage trades, but like he said, it doesn't give you a set, this is how you trade strategy. So in that sense, he's right, and you have to build your own strategy. And I think that I think that's the way it is no matter what. I don't think that what works for me may or may not work for you. So I think that this is a very personal. Sorry, I got cut off. But so trading is a very personal journey. Like I said, one size does not fit all in the markets. Everybody has their own style. There are three main types of traders: always-in traders, swing traders, and scalpers. Some I would consider a hybrid, which is what I consider myself, I call myself a probability trader, like I said, because I prefer high probability setups and I hate low probability entries. And that's because I can't take the low winning percentage, so I prefer waiting for high probability entries. So he has a question regarding my book. He says, when will you release your book and what content will it provide? Well, I hope to release it the 1st of October, but unfortunately I haven't had a lot of time to work on it lately. I hope to get started back on it soon. I have the majority of it done, and basically what I'm doing now is going through and putting chart examples with annotations. As far as what content will it provide, it describes. It's basically, I don't know if anybody has read Al's first book. It's kind of like a sum of his trading style in all three books put together in one, but my book I consider it my dissertation or my trading plan because it's basically everything that I have learned through Al Brooks and through trading. So it explains the market cycle, how the institutions trade, how they manage trades, and then I also take it a step further than Al did, and And you also have to understand that Al Brooks, he is highly educated. I have a bachelor's degree, but I am nowhere near as educated as he is. So, and obviously I have nowhere near the experience and market knowledge that he does. But I do know from learning from him. But I don't want to say I dumbed it down, but his books are very challenging to understand, and it really takes a lot of work to understand what it is that he's saying. And my book, I tried to make it as short and as easy to understand as possible. So I don't want to say I dumbed it down, but I think that it's a lot easier to understand. I've shared a few chapters with a few other traders, and they seem to really like my writing style, and it seemed to help them understand what Al is trying to say in an easier form. I also try to apply structure to learning how to trade. Al is very good at explaining the market cycle and institutions, but as far as how to identify a setup or how to identify the probability of a setup, I think it's not as easy to understand, and I tried to take it a step further than he did by making it I don't know how to explain it, but basically saying this is how you identify a 50% setup, this is how you identify a 60% setup, this is how you identify a 40% setup, and I also go through charts and, like, say for example a trending trading range day, I also explain the different trading styles and how each trader manages trades, but I also explain how each trader trades the day. So, like, for example, if it's a day like today, I would say a swing trader probably sold here, and then I point out the entries that a swing trader would have taken. I point out the entries that an always-in trader would have taken, and then I point out entries that a scalper would have taken, and I tried to create a model of how to identify probability and how to then structure a trade around the probability, because probability is the most, in my opinion, it's the most important variable in the trader's equation. I think that without first understanding probability, you will have a hard time deciding whether to scalp or to swing, hold or to exit. So I focus on probability first, and then I structure a trader's equation. Many traders and many other many people on Wall Street often talk about the risk to reward ratio, but they never talk about probability, and that's because the probability is factored into the risk reward whenever they are going for 2 times their risk. That makes it a low probability trade. So instead, I focus on probability first, and I say, okay, that looks like a 60% setup, and then I structure a trade based on the probability. So I I think that my book is more structured and easier to understand, and I hope that it shortens the learning curve for anybody wanting to learn price action. And I hope to release it the 1st of October, but like I said, I have no clear deadline, and I'm not positive that I will be done by then. But that is my goal, to get it done by then. My wife is pregnant, and we're having our first child in the middle of October, so I would like to get it done before then, and that way I can release it and then give anybody who wants to read it a few months before I start. I plan on doing some other things at the first of the year with my website, so I plan on releasing it in the 1st of October, and that way anybody who wants to read it has a few months before I start doing what I plan on doing with the website. So hopefully that answers some questions and provides some more information as to what I do and my personal journey and my book itself. So with that, I hope everybody has a good night.